Whether you like them, loathe them, or know nothing about them, being an in-house lender for a real estate office has its advantages. And I have a special treat for you loan originators and mortgage brokers out there. In today's top producer interview series, not only do I have one of Florida's most productive loan originators, but somebody who has 2 decades of experience being the in-house lender. This is a story and an interview that you can't afford to miss. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This guy drove the treacherous I-4 from Tampa to Orlando this morning just to meet me face-to-face in studio. He's originally from Pennsylvania, went to college in Ohio. He has been in Florida for almost 20 years. He's been a top producer in the mortgage industry for well over 10 plus years. He's a father, he's a husband, and when he's not slinging loans, you can watch him either watching college football or cheering on his beloved Tampa Bay Buccaneers. He is my new friend, Shawn Miller. Shawn, welcome to T-Lop.
Hey, thanks for having us.
I'm super excited. So you and I got to meet for the first time in real life at Sales Mastermind this summer.
Yes, in Las Vegas.
In Las Vegas. We're at the event. You were with our boy, Brian Lovell.
Yes.
Brian's like, hey, I have a +1 for our dinner. I'm like, bring them on. The more, the merrier. So as you, as me, as Dan Snyder from Lower, JC was there. We even had some people from Flat Branch Home Loans with us. Yep. Went to this amazing dinner at STK. I highly recommend STK when you're in Vegas. Just make sure you get there after 8 p.m. because that's when the DJ starts.
Oh,
it's the one place you can go for a nice steak dinner and a badass DJ. And you and I got to talking and decided at that point we should do content together. Because you're a content guy, right? Your wife's coming into your office and you're doing some content?
Yeah.
What type of content are y'all doing?
Well, being completely honest, it's when my assistant forces me to do the content.
Okay.
I said, okay, so you're going to make me, go through about 10 videos, and we just have the titles of the videos, and I just try to knock them all out. A lot of times, one at a time.
Okay. So are you doing these for YouTube, for Instagram, Facebook? Where are you putting your videos?
Yes, all of that.
All of the above?
Yes.
Okay, but your team's doing it for you.
Yeah. Yes. Yep. Our team administrator.
Yes, because as a top producer, you've probably already mastered the. It's not about how; it's about who.
Yeah.
Right. Because we can't be all things to all people. We can't be in all places at all time. So building out a team allows you to make sure you're checking as many boxes, but it doesn't have to be you that's actually doing the work. If you can find the right people, hold them accountable, set proper expectations, etc.
Yeah. I couldn't imagine ever doing this by myself ever again.
No, I can't even people are always like, oh, D.O., you got a podcast. I bet you're good with technology. I said, I got a podcast because I'm good at building teams.
You know, it's kind of funny. I was doing, we did an interview kind of like this with, it used to be called GTAR, Greater Tampa Bay Association of Realtors. Now it's called STAR. Anyways, they were like, so what's your YouTube channel called? I was like, you know what? I actually don't know what my YouTube channel is called. I know I have one.
Yes. Well, and you have one for this reason. As a top producer, and we coach this over at T-Lop's Originator Coaching, it's all about how we show up online, right? Back in the day, you could rely on that realtor saying, hey, call Shawn Miller over at Van Dyke Mortgage. He's great. And people like, awesome, I'm taking your word for it. Now it's like, hey, call Shawn Miller over at Van Dyke Mortgage. He's great. And they're like, all right, but I'm also going to look him up online.
Yeah.
So it's not even like you're using your social to attract all these new leads. It's more of like, no, when someone tells their friend or their family or their client how great I am or how great my team is, and they search us, you need to make sure you show up on that top page of Google. That's Facebook, that's Instagram, that's YouTube. And I'm happy to hear that you're doing content. He was bragging, by the way, y'all. He goes, yeah, I'm so good that I sit down and do one take and they post it.
Yeah. Well, if I look at it after doing the one take, then I'll maybe think I should have did a little bit better. So I usually just do one take and done. It's good enough.
You know what? Sometimes it's a matter of getting it done.
Yeah.
I have a t-shirt I'm wearing to the gym today because I packed my bag this morning. And it's one of my favorite t-shirts. It says right on, get shit done. And I've only come across one person who was like, that I don't know if I buy into your shirt. I'm like, oh, do you not like this? The swearing? He's like, no, I don't like the theory of getting shit done. I like to be more intentional. I like to be more calculated. And sometimes getting shit done allows people to do things sloppily. I was like, all right, cool, touche. I get it. But there's also times that like we get paralysis by analysis?
Yeah.
Or what's the saying that I absolutely love where they say perfection is the enemy of done?
Yeah.
Right? We don't need for everything to be perfect. Yeah. Some things probably require more attention to detail. Others, it's like, no, let's get it done and let's get moved on. We have to be cognizant of the law of diminishing return. So speaking of which, let's jump into today's interview. Okay. But before we do, because by the way, so Shawn is a $60 million originator this year, right? If we want to go back to COVID years, $100+ million back-to-back years. He also is a branch manager, producing branch manager. So his branch will do another 40, 50, 60 million on top of his personal production. And he is someone who has had great success being the in-house lender at a Keller Williams. Now today, you'll learn when we talk to Shawn, that might not be his business model. However, he's not going to knock it, and he may even give us some tips and tricks on how you too could build your business, build your reputation, build your following by being the in-house lender. But before we do, what we need to do is pay some bills. So do we take a quick pause for a word from today's show sponsor. Shout out to our sponsor. Today's sponsor of the show is Lower Mortgage. Shout out to Lower. Yes, they reached out and they said, look, we are on a mission to represent mortgage lending of the future. We're already a top 25 lender. We're already funding $500+ million per month. We feel like we are on a mission to become the most respected lender in the country, a top 10 lender in the country, by helping our branches and our originators become top 5 in each of their markets.
That makes sense.
They're going to dominate traditional networking, online networking, and creating a work environment that is tech-enabled, future forward, and one of the best places to work. So if you're ever interested in learning more about Lower, and you don't want to take John's word for it or my word for it, okay, they make it super easy. They offer a no pressure, anonymous, no questions, hop on and let us present to you why we are doing what we're doing, where we're trying to go, and help you kind of look under the hood without being recruited. Look under the hood without the sales pressure and all that comes with like being recruited, that sometimes if we're not ready for it can be a little bit icky. So if you're ever interested in being included in one of those calls, I believe they call them Lower Launchpad. All you have to do is reach out to my guy, Connor Bartley, over at Lower. His email, cbartley, that's CBARTLEY at lower.com. Connor can make sure you get invited to the Lower Launchpad. You won't be sold, you won't be recruited, you won't see your face, and no one will know that you're on the call, but it gives you an opportunity to look under the hood. All right, Shawn, so we're back, and here's what I want to do today, if it's okay with you. I want to take the people on the journey of Shawn Miller, but along the way, I'm going to look for those moments where I'm like, hey guys, slow down, write this down, because this piece of information, you'd probably have to pay some coach $500 to get with you for an hour, and you just got it for free, because I have learned that in all of our stories and all of our journeys, we're not as unique as we'd like to be. We're pretty ordinary, which means this is someone else's journey. This is someone else's experience that you've got to live ahead of them. And if they just tune into the show, they're going to shorten their learning curve, or they may even pick up some ideas that they weren't already thinking of, but because they tuned in, we've now helped them level up without them ever having to pay a dime.
Yep.
But we're going to start with, we know you grew up in Pennsylvania. I talked about that in the opening. Went to college in Ohio.
Yep. You
didn't go to Ohio State, but you are an Ohio State fan, correct?
That is correct. We didn't have a football team where I went to college. I went to a small private school, Mount Vernon Nazarene College, now a university. I had a mathematics degree.
No way.
So mathematics degree, secondary education. Thought I wanted to be a math teacher when I got out.
Okay.
Thrived in math, like aced Calc 1, 2, and 3 in college, did real well at that. And then I saw what the math teachers were making. Right, income-wise, when I first got it. Not knocking math teachers, by the way, guys.
Yeah.
Okay.
Maybe you're just knocking the state of Ohio, because maybe if you were to go to the state of New York or California, where they pay teachers a little bit more, or even Illinois, it would have made sense. No, I'm with you. If someone showed me what teachers make in Florida, I was like, no, thank you.
Yeah, it's tough for them to buy a house.
Yeah, what else can I do? Yeah, you and I try to do loans for them.
Yeah.
Hope that's a dual income household. So I didn't know that. You went to school for math, so you're a math nerd.
Yep.
Okay. Thought you were going to teach math in middle school or high school. Yep. Did you ever even attempt to make it that far? Or like you got to 22 and you're like, yeah, I'm not going to do this?
Okay. So I got out of college. I said I was going to take kind of a year off, not off work, but I served at a nice restaurant.
Okay. In Columbus.
In Columbus.
Because you wanted one more football season.
Yeah. Well, yeah. I mean, I just wanted to, I was working so hard through college. I just wanted to have one easy year before I actually got into my career.
And your parents were supportive of that?
Well, I mean, they still lived in Pennsylvania, and I paid my own bills. So,
there we go. So It didn't matter if they supported it or not.
Yeah.
Okay, I like that.
My best friend then, so I was interviewing for an actuarial assistant job with Nationwide Insurance from up there.
Okay.
And my best friend from college got the job over me, and I went into sales, and I never looked back.
Wow. So was your first real adult job in the mortgage industry sales, or what were you selling?
My first real job was selling Lexuses.
No way.
Yep. So I sold Lexuses in Columbus, Ohio. Did that for a little under a year. Then I did new home sales for 2 builders up there. And back then, I was sitting in the sales model, and I could go over tax savings, payments, credit reports. It was a lot different, like the sales reps, what they could do back then. And I talked to my, and back then, like the MI Financial, it was the finance company for MI Homes. And I'd have lenders coming into my office promising me, the world, and then not answering their phones, their voicemails being full. And then I had this one lender come in. Now, MI Financial would do the FHA loans, VA loans, conventional loans. But I'd have this guy from the mortgage firm come into my office, and he did what he said he was going to do. His voicemail wasn't full, and he would do all our subprime deals. And but then I'd call him on Saturday, Sunday. He'd be out in his boat, and I'd be sitting in the model home. And I'd be like, maybe I'll just go to that side of the business. I already like the finance side of it. And
no way. So were you selling homes in Florida or Ohio?
Ohio, Columbus.
So you were still in Columbus, Ohio.
Yeah.
So your story is go to college for math, take a gap year, serve tables, hang out. You thought you were going to get a job in actuary sciences. Unfortunately, your best friend took that job away from you. Yep. He outkicked you on that one. So then you go and sell cars.
Yep.
Which, good experience selling cars? Like, how would you describe selling cars to your daughters?
I loved the experience, the camaraderie with the people at the office, the sales reps. That was second to none. I mean,
were you an athlete or like participate in sports growing up?
Football, basketball, baseball when I was real young. Then I did football, basketball in elementary school and junior high, and then basketball in high school.
Okay, yeah. So you were a competitor.
Yeah.
Like you're a competitive person. Sure. You're coachable.
Yeah.
And you have to be really good at math. Yeah. And I ask that because there's a lot of people who tune into the show. They're not even in the mortgage industry yet. So they found our YouTube channel because they're considering a career change. And shout out to all those people because we need you. This industry needs new blood. And Shawn and I may even talk about that in a little bit. But I love for people to hear a top producer's journey or top producer's story because you're like, yeah, if you can't find a good gig today in mortgage, go sell cars for a year or two. It'll be a great experience. You'll learn how to sell. You'll also work some pretty shitty hours, at which point it's going to make the hours in mortgage look that much more attractive. So you left selling cars, you took a job selling homes, new construction.
Did that for a few years.
And while doing that, you found enjoyment in talking to people about the financial impacts of home ownership, not just like touring them around the model, letting them pick out paint colors.
Yeah.
No, you like that. And then you had your fair share of good lenders as well as lenders that maybe weren't so good. And you're like, wait a minute, I like what they're doing and I can maybe increase the service level. Is there a better career, potentially more money doing mortgages?
Where I didn't have to work every Saturday, Sunday in a sales model.
And you didn't have to work. Yeah, that's, you know what? That is what I love about mortgage. I tell people it's a Monday through Friday, 8 to 5, and then available nights and weekends. Okay. Like available nights and weekends. Now look, we all have homework. My kids have homework, right? Your kids have homework.
Yeah.
Yeah, we have homework. There's definitely plenty of times that I have to log in at 7 p.m. after dinner, and from 7 to sometimes 11, I have to structure those 4 deals. But boo-hoo on me, I have 4 deals, which means I have $1 million in volume, which means I have an additional $12,000 in income coming in.
Yeah.
Yeah, that shouldn't be homework that you cry over when there's income attached. So where did you go that first mortgage opportunity?
So my first opportunity was with the mortgage firm in Columbus, Ohio.
Shout out to the mortgage firm because this would have been 20 years ago.
Yep.
And that's the same mortgage firm that is headquartered here in Altamont Springs,
Actually,
Florida, right?
Different.
A different mortgage firm. That's okay.
It was
good context to have.
Yep. Different one that was down here. And they gave me an opportunity. So people ask me, well, do I get a salary? Do I get a draw when am I 100% commission? I'm nervous to be 100% commission. I was like, well, I got a draw of, it was either $3,000 or $4,000 my first month in the industry.
Okay.
And I've never gotten any type of salary
Didn't need it.
Yeah. Well, fortunately, thank the Lord. Yes.
Yeah.
It went really well.
What year did you get into the industry?
2003.
Okay. So 03. So you had a nice little run of 03, 04, 05. 6, things started going into sideways. 7, it was like, oh, WTF, what's happening? And 8 was like, kaboom.
Yes.
Right?
Yes.
For those that haven't studied the financial crisis, that's my 30-second recap of what happened. What year did you all move to Florida then?
So I moved in 06.
Okay.
So something I feel like might be important. So what I did really well at, and from 03 to 04 to 05 when I first got in, I touted the subprime products to the new home sales models. So I knew MI Financial and like the big builders up there, they kept all their deals in-house except for the subprime deals. So I knew the subprime guidelines better than I feel like anybody.
Okay, so we're gonna take a pause there. By the way, kids, when you hear subprime, just insert non-QM.
Yes.
And that's the new language we use for basically the creative financing for the things that don't fit inside of the box, Fannie, Freddie, FHA, VA. And back in the day, not all subprime was terrible, right? Like back in the day, you still had to have good credit. You still had to have down payments. Things did get sideways. We started doing subprime loans, 100% financing on 580 credit scores. That probably, looking back, was not a good idea.
One day out of bankruptcy, one day out of foreclosure.
Yes, but I think the learning lesson, and I didn't get a chance to ask the question, but I appreciate you preemptively answering it, which is you took what the defense was giving you, and you had some ins with new construction sales. You knew what their mortgage companies did well, but you also knew what they didn't do well. It's like, cool, I know they don't do alternative financing well. So for y'all, it would be if you can do a no ratio loan today, if you can do a bank statement loan, a DSCR, right, an I-10, a foreign national, like
bridge loan,
loan, condo-tel, like so many of these, what I would call non-QM loan products. Shawn learned them back in the day, and so you went out and solicited based on that, and it obviously worked well coming out of the gates.
It's easier to get your foot in the door.
Yeah.
Like, I tell my loan officers on my team now, listen, when you're calling the listing agents, you don't need to tell them that we do FHA loans, VA loans. I mean, you can tell them that, but tell them, hey, listen, we're doing a bridge loan now. We're doing a blanket loan now. We're doing, we're closing a lot of DSCR loans now. By the way, that's an investor note doc loan. You have to educate the agent what it is.
Yes.
You can get interest rates in between 6 and 7% on these investor note doc loans. So you need to get your foot in the door with those kind of products that, frankly, we have loan officers at our company that don't want to take the non-QM loans. They only want to do FHA loans, VA loans, conventional. And I'm not saying every loan officer. I'm just saying you have loan officers at companies that are afraid to do those outside the box products.
Well, it depends. I still coach a little bit of that. I will tell a loan officer today, I need 5 loan programs to make you a millionaire. 5. Conventional FHA, VA, your traditional jumbo, and I'll let you pick the 5th. It can either be DSCR or your state-sponsored down payment assistance. I don't care which one.
Yeah.
Those 5 loans, you can make $1 million a year. It doesn't mean that you're not going to occasionally do a bank statement or occasionally do, some other of an offshoot, but you don't need those. However, I coached this class, Shawn. We were talking about it at lunch today. It's my signature. We call it Originator Launch. It is, I have put 60 people through this boot camp. These are the men and women. Shout out to Ben Naranjo with CMG. He just made President's Club. When I met Ben, before he went through boot camp, he never closed a loan before. So Ben went from never closing a loan to Rookie of the Year to now President's Club.
You guys are doing something right.
We know we're doing something right. Then I go through all the other graduates, whether Adam now has his own branch, Lindsay has her own branch, Amanda's the #1 originator in Alaska. Sarah almost doubled her income. She went up 50% in her income. Awesome. Phil just texted me in September. He had already made more money in September than did all of last year.
Oh my gosh.
Right.
That's
so
awesome.
In this boot camp that I put people through, and it's funny, I have 10 people going through it right now. My lesson that I'm teaching tomorrow is all on how to sell the sizzle. And it's what you just talked about. Finding a product, even if you don't plan to originate a lot of it, But if you can market it in a certain way and get your foot in the door, it sizzles. You found a way to find products that sizzle to get your foot in the door. And then once you got the foot in the door, I'm sure you charmed their pants off. They saw how smart you were and how competitive you were. And eventually you probably you gained opportunities to do more than just the subprime loans.
Yes. Well, so going back, so I moved down to Tampa in 2006, did 3 or 4 years of originating up in Columbus. And then down here, I had an opportunity to go in-house inside a Keller Williams real estate office.
Wait, is that why you moved down here?
No, the mortgage company that I was with up there, we were opening a branch down here. I was in a relationship with somebody. She was working for a new home builder down here. And frankly, I was kind of single, kind of not in Columbus, Ohio. And I needed a change.
Okay, yeah. I mean, look, Columbus back then wasn't what it is today. I kind of like Columbus today.
Yeah.
I mean, I still joke that, Ohio's not even a real state. But and I've already annexed Cincinnati into Kentucky because I have too much fun going to Cincinnati.
Kinda, yeah.
And I couldn't believe that a town as fun as Cincinnati would belong to Ohio. But, I've been to Columbus a few times in the past couple of years. It's definitely way better. But I'm sure when you were there, you're looking at Tampa, Florida. Columbus, Ohio is a no-brainer. Yeah. You're like, I gotta go down there. Plus, there's a girl that you had to see, and it all worked out.
I tell people it's a little weird down here Christmas Day, but you get over it real quick the day after Christmas when it's nice out.
Yes. Okay, so you moved to Florida from Ohio, and you had a job in place.
I was still working for the mortgage firm at the time.
Yes.
Yeah.
Okay.
But it was tough for me to get my foot in the door with real estate agents in Florida.
Okay.
We were a conventional lender. I don't even know if we were doing FHA at the time.
Oh, wow.
I think it was just conventional and subprime. So it was tough to get my foot in the door. And then I got an opportunity to come on board inside a Keller Williams real estate office. And I was like, and they had like 300 or 400 agents there. I'm like, what better opportunity to get in front of realtors than to be in-house there. And I came on board with the in-house lender that was working there.
And you did that for how long? How long were you the in-house lender with that Keller Williams?
From 2000, I think that was like 2008 to 2023.
Okay.
Up until a couple years, 2-3 years ago. The years kind of smeared together with
15 years-ish,
roughly,
right? So roughly 15 years. And would you say that when you did that, you were a top earner in the United States?
Yeah, in the United States, yes.
You were the top 1-2%.
Yes.
Okay.
Yes.
Would you say though, by doing so, that your average commission per transaction was maybe less than?
Yes.
Okay, so you were making reduced bips.
Yes.
But you were still earning more money than 98% of the American population.
Yeah, closing a lot more transactions.
A lot more transactions.
Yeah.
And I want to preface that because being the in-house lender, it gets beat up and knocked around. But I'm like, look, if we put things in perspective, I don't know. Like, have you met Shawn Miller? Like, you want to live his lifestyle? I think you do. You want to go to Bucks games? You want to own his properties? Like, yes. And have his career. And it's like, and he was able to do so by being the in-house lender in a Keller Williams. And by the way, it could be the in-house lender in a Coldwell Banker. It could be the in-house lender in, so many different aspects that, it's like I said earlier, don't knock it until you try it.
Yeah.
I want to ask you to answer this because you're not an in-house lender anymore, right?
I'm not. But the thing that really changed was COVID. So since COVID, a lot of agents aren't coming into the real estate office anymore.
Okay.
So when I was in-house lender from 2020 to 2022, where it used to be like 20 agents coming in the office, then it was like 4 or 5. Where they used to have tons of people at the team meetings, now it was like on Zoom, or few people in there. So it wasn't as easy.
Okay, so that's going to add a bonus question to the series of questions I'm planning on bringing you through. I want you to look back at those 15 years. What are 3 things that you did really well to capture the business? Because just because you're the in-house doesn't mean you're guaranteed to get the business. You still have to earn it. And you can't screw it up, because if you screw it up, by the way, that's going to spread like a wildfire.
Yeah.
And everyone finds out. But when you look back on your career, what are the 3 things you did as the in-house lender that you're like, man, if others, and maybe they're the LOs that you've brought in and you've coached them, hey, do these 3 things and I guarantee you'll have good success as the in-house lender?
Well, being in the office, being available so they can see you working, grinding it out, hustling, and they can see on the phones. I mean, you get to rub shoulders with them, you get to build rapport with them, going to their activities, their happy hours, their team meetings, their special training courses. So learning what the realtors go through on a daily basis is really important too. Like how hard it is for them to get the actual lead. we think like when they just give us a lead, like that was easy for them to get. They're giving you their paycheck.
Yeah.
That may be their mortgage payment that month. So available. Doing things that the agents are doing, and then, delivering the finished product, closing the loans, and doing what you're saying you're going to do. Like, so like when I did new home sales, again, I'd have the loan officers coming in and promising me the world, and then their pre-approval letters would take 3 or 4 days to get over to me. They'd need extensions on closing dates. So I was like, I'm going to do the little things right, dot the I's, cross the T's, under promise and over deliver versus the other way around.
Yeah. So like if I were to summarize, and that's what I would have guessed. I don't have your type of experience working in-house, but I've done it as a manager. I've done it as a leader. I've done it as an originator throughout my 20 plus year career. And it's like, yes, you still have to do the basics extremely well. That's proactively communicate, do what you say you're going to do it on time, and do it consistently, right? Which is like your pre-approval letters need to mean something. And closing dates are like actual hard dates that we don't miss. And if we don't miss them, it ain't our fault, right?
Well, lots of the people that got in the mortgage business, they were in heavy refi shops. So if you didn't close a refinance on time, it's not as big of a deal. They don't have a house they're moving out of. They don't have earnest money. They don't have like inspections. It's the closing date don't matter as much. But on the purchase side of the transaction, I mean, that you need to be able to deliver.
Yeah. And the one other thing you said that I freaking love, when you're the in-house, you got to be one with the team. Like you're not just there showing up. It's like, no, you're there and you're ingrained in all of their activities, right? So if they're doing some kind of a get together on a Saturday with their families, you're there with your families. If they're having a meeting, you're at that meeting. Like, you're becoming one with the culture. Looking back, what are 2 things that you would caution someone to be like, hey, look, being the in-house lender might not be for you, because this is what no one will tell you about being the in-house lender. Like, what are 2 things that, like, your daughters, our kids are like, oh, Dad, that's an ick. I don't know if I want to do that.
Yeah. Well, it's kind of like being in the 2-minute hurry up offense all day, every day, all day long. Like, it's just very intense. Like you're in there, you're on the phone with a client and you have an agent coming up to your door and they're putting like purchase contracts up there in your door. They're trying to get, hold of you on the phone. Like while you're on the phone, I'm like, I'm on the phone.
Yeah.
Like I once had a stop sign put up. I said, stop. If you see them on the phone, either send me an email or come back when I'm off the phone. Don't like try to talk to me while I'm on the phone. My boss only let me have that up for 24 hours though. She made me take it down. So now we joke about it like 10 years later. They go, remember that stop sign you put on the door?
Yeah. Okay. But I think understanding, I like that hurry up offense, right? For those sports fans, we are in football season. So it makes sense to be like, hey, it's the 2-minute offense and we're coming at you as fast and furious and we're not stopping.
Well, it's a great problem to have. I mean, I've been top 1% originators in the United States for 15 years. I wouldn't have got there by not having all those relationships with those agents. And not all those agents always stick with that Keller Williams office. They may go to Remax or Future Home Realty or Century 21. And then you get opportunities to work with agents that they know at those offices. So that's helped me be to where like it used to just be me in the office. Now I got a team of 10 or 11 people. Where it never would have happened if I wouldn't have had those initial realtor relationships and being able to expand on those.
Do you find when they leave the in-house, they still stick with you?
If you've done a good job for them, typically, I mean, like if the lender that gets that agent's first or second deal has a greater chance to keep working with them in the future.
Okay. Now, how about this? You're no longer the in-house lender. How much of your business have you lost because you're no longer the in-house lender?
I don't think much at all from the existing agents. I'm not saying nothing at all.
Yeah.
But like, we still get a good percentage. We actually get a greater percentage now than the in-house lender they get.
Oh, wow.
That's in there now.
Okay.
Statistically speaking. But the new agents that are coming on board, you don't get the opportunities to do the, new agent orientation or the training classes. So that's the one thing that we don't get to do. But you're also not having to go to all the happy hours, all the training classes, all the team meetings. Sometimes that's not worth your time, but you still need to, if you're going to be an in-house lender, you need to do those things consistently, whether you feel it's worth your time or not. You can't go to the office every 2 to 3 weeks.
Yeah.
You got to be in there. I mean, I was in there every day, Monday through Friday, and 8 to 9 a.m. in the morning to 5, 6, 7 p.m. at night.
I mean, that's crucial for all of us to be reminded. Like this is a career. Get up every day, put on your uniform, go to work. And when you're at work, you work, right? Like just hanging your sign up on the door or paying the money. Like, no, that's like the barrier of entry. That's the admission price. But that doesn't mean you're going to actually enjoy the show or put on a good performance. I'm going to keep the dialogue going. Kind of same train of thought, though. You are a producing branch manager, and you have been for, what, the past 10 years?
Yeah.
And like this year, you were telling me at lunch, you're going to do 60 million. And then you have 4 or 5 LOs who work for you, and combined, they're going to do another 50 or 60 million, right?
Probably, yeah.
So your branch would do well over 100 million. Half is yours, half is theirs. How do you prioritize your day? How do you choose what to do first?
Well, what I used to do is all my stuff. Now I want to say, okay, focus on, answer the loan originators' questions first, and then focus on my stuff. Because I'm making their life easier. I can help them out like in 1 or 2 minutes where it may take them 20 minutes to figure things out themselves.
But on your personal production, do you have a team behind you?
Yeah. So I have a loan LOA, loan officer assistant, who she has access to my emails. So she helps me delete emails, sort emails, put, income documents that are coming in. We have a shared, we call it a client folder where like we'll put W-2s, tax returns, if they're not uploaded into your, Flowify or Simple Nexus or whatever that may be. So she helps me out with that. She'll send the closing disclosure out, like, here's your final figures. She'll just help me maintain my email inbox, because that's a feat in and itself.
Okay. So you have an LOA. Do you have a dedicated processor?
Yes. Well, I mean, myself, I have one dedicated processor, and then the rest of the branch, they have 2 to 3.
Correct. Yeah, but you have one person dedicated to your production.
Yeah.
So it's you, an LOA, and a processor.
Yeah.
And you guys are doing 120 units a year.
Yes,
roughly about 10 a month.
Yeah. And I have an ops manager, a team administrator that help out with answering phones, doing marketing.
Correct.
So there's
for the branch, but that's a branch. Service. Okay.
So I just have one person like directly working for me along with the process.
Now, have you set office hours for your LOs? Like, meaning like they know, hey, look, if you need help on a file, you can get me between 8 and 10, or you can get me between 4 and 5, like the way a professor does? Or is it kind of willy-nilly, come as you go? If you need something, reach out to Shawn.
I would love for them to be working all doing those hours.
Well, I was talking more about like, hey, as your branch leader, like, I make myself available to you between these hours. Yes, you and I both would love all of our teams to get up every morning, put on our uniform, and go to work.
Like they did prior to COVID.
Because I've seen their numbers and I've seen the productivity, and that's when it was at the best. That's when it was at the greatest. But no, I just didn't know if you actually had to, like, being a producing manager, for those that haven't done it, it's one of the hardest jobs out there.
Yeah.
You have to manage, you have to lead 2 different tasks. You have to produce, because that's how you probably pay your bills. And like you were telling about how the owner of Van Dyke was just in town, and he loves you, and he loves the work you do, and he wants more of it. By doing more of it, he wants you to recruit and grow.
And duplicate myself.
And duplicate yourself. So now that's like a 4th task. Like, that's difficult. So I was just curious, like, how does a guy like you do it all? Are you just working 7 days a week? Are you working 12-hour days? Or have you been able to put in some kind of a structure that maybe the audience could pick up a nugget or 2 from?
Well, the one thing that, from rates going up higher, like, I'm not having to work as much on Saturday, Sundays. I'm not saying I don't send a pre-approval letter out, or I don't like get an online app and have to take care of that, from time to time, but it isn't happening as much as it was back in 2020, 2021.
Yeah, but you're also not making the money you were making in 2020, 2021.
Correct. So when I go on vacation, I forward my cell phone to the office so my phone doesn't ring.
Okay.
That has been huge. Like, that makes my wife a lot happier.
And who picks that up, your LOA?
It goes to our main office line.
Okay.
And then, like, the main office line, 3 or 4 people have access to answer that phone.
Okay.
So that's been a huge help. Like, if I'm in a meeting for 3 or 4 hours, I'll forward my phone.
Okay.
Having somebody, being able to check your emails, huge. Having a processor that you can count on, and you have expectations that you're setting up with them. Hey, here's what I need your help on. Here's how I can help you. Geez, I got off on a tangent there.
Yeah, no, 100%, because you're basically describing what any of us have to do. We have to find some who's and not some how's. And when you find the who, you have to obviously not just find the right one, but you have to set proper expectations, train them up, hold them accountable, give them their own SOP or standard operating procedure. You and I have got to know each other now for the past 6 months. So I know from just us chatting, and that's what happens when you go to these conferences. By the way, when you go to dinner, you would like to believe we talked all about Tampa Bay Buccaneers, Ohio State football, which we probably did a little bit, and a little bit about our kids and our wives, but a lot of it is we just geek out. That's what we do.
Yeah.
Because if your wife's anything like my wife, she does not want to go to dinner with y'all and have you and I geek out on mortgage.
Yeah.
So she tells me, go to a mortgage conference and geek out with the geeks. But when we're on us time, we're not talking mortgages anymore. Honey.
Oh yeah, I don't even talk mortgages at home.
Yeah,
like yeah.
So you and I have had a chance to geek out now over dinner, over lunch, and then now today. And I've learned from interviewing top producers like you. Yeah, you guys build systems, and then you build teams. Yep. So you have an LOA who can hold down the fort. You have a processor dedicated to you, and you have an ops manager who not only is helping you manage your branch, but manage the pipeline of your loans and your LO's loans. So you can make yourself available to your LOs, because I have learned as a producing manager myself, I have to put my LOs first, or I don't manage.
I mean, I would say for a new loan officer, joining a team that has those systems in place is probably going to be the easiest way for you to be able to be successful from the get-go.
God, we talk about this all the time on this show. And I do this thing for my buddy Rocky. Shout out to Rocky. He's with MLO Study Buddy. And one Monday night a month, I hop on with 60 people who are studying for the NMLS. 60. I give them an hour to 2 hours of my time.
Okay.
I call it Ask Me Anything, no holds bars. After 8 p.m., sometimes I'm drinking a beer or a sangria while I'm answering their questions.
Yeah.
And every single time it comes up, well, I need help finding a sponsor. I go, well, first stop. Because only alcoholics have sponsors, okay? And I don't think you're in AA. If you are, high five, I give you a hug. I should probably be there with you, not even joking. But you're not looking for a sponsor, you're looking for an employer. You're looking for a mentor, you're looking for a leader. And I wish there were more Shawn Millers out there, or Mike Smalley's out there, or Kevin Murphy's out there, but you need to go work somewhere where there is structure, there are systems, and you can tie into that structure and those systems. Unfortunately, Shawn, I don't know if you know this. Like, there's a reason why you're a top 1%er. There's not a lot of you. Like, a good friend of mine, Molly Nadeau, shout out to Molly. She's up in Minnesota. Molly swears she would only bring in a rookie if they first worked on her team for 2 years. Gwen Swain. So Gwen's a friend of ours, Waterstone Mortgage. She coaches for us over at T-Lop's Originator Coaching. She's a lot like you. She's doing 50, 60 million a year. Her branch is doing another 100, 120 million a year. So she's having to wear multiple hats. Well, Gwen's favorite way to bring in a rookie is on her team. And I'm like, yes, but those opportunities for the 20 or 30 newly licensed originators, there's not 20 or 30,000 of those opportunities.
Yeah.
But if you can ever get hooked in with a Gwen Swain, or you can get hooked in with a Shawn Miller, like, yes, or a Molly Nadeau, like, yeah, you're hitting the big time. Are you still doing that? Do you still bring people new into the industry, or are you looking to grow your team?
I mean, always. We're always looking for, good quality, talented people.
Both experienced and inexperienced?
Yeah, both. Yeah. I mean,
okay.
I'd love to get a newer person now and an experienced person. I mean, I've been with Van Dyke Mortgage for 15 years. I tell people, if you can't be successful here, I don't think you can be successful anywhere.
Yeah.
Because we're small enough to where you can have your voice heard. Like we were talking about that over lunch. That's something I really like. The appraisal department's not huge. The underwriting department, we're not closing $3 billion in production a year. Like we're doing about $1 billion in production.
Okay.
There's no reason we can't get to $2 billion or $3 billion, but right now we're not there. So I like it because I can have my voice heard. I can call my underwriting managers directly, underwriters. It's just, it's a very well-oiled machine. And there's more companies like ours.
Oh yeah. I was going to say, I spent 16 years at Waterstone.
Yeah.
Very similar.
Yeah.
Like I love Waterstone for that reason. I came to Lower. Why'd I go to Lower? Because it reminded me a lot of what I still had at Waterstone. I have friends at Flat Branch Home Loans and Eustis Mortgage and Synergy One, and they're all very similar, where they're big enough that you're not afraid of them, being absolutely out of touch with reality going forward, but they're small enough that, you still feel like you have a voice and you're not just a number. But what's cool about what you're doing with the rookies, and I'll tell, because we can't hire every rookie. Like I made an entire career off of my rookie loan originator program. Like I can't wait to introduce this to the entire industry so that more banks, credit unions, and IMBs can benefit off of my success. But I have to tell the rookies, we're only still hiring the best of the best during the interview process.
Yeah.
Like when you're looking to hire a rookie, I'm still only looking to hire someone that has been recognized at being the best at something already. Someone who on the intelligence scale is a great problem solver, meaning they're not dum-dums. They're pretty smart. They have a lot of gas in their gas tank, and they have a go button and a very high ceiling. And that's not necessarily everybody, which that's okay. It's a reminder that Shawn can't hire every newly licensed, inexperienced person. Dustin or Mike or Molly or Gwen, like we can't hire, but we do like to hire them. Yeah. And if you can get on with our teams, yes, you're probably going to be sitting in the pole position for success. Not guaranteed, but you definitely have a higher probability. And it is always nice to offset a rookie with someone who's already experienced that maybe just needs better leadership. Maybe they've never been exposed to someone who does $50 million a year. And like, wait a minute, I can tie into your systems and processes so I too can think bigger. You're like, hell yeah. Right? My name's Shawn. My name's Shawn. Like, look me up. Yeah. Couple questions before we wrap things up. Looking back on your career, what is one thing that you're grateful you did and you make sure that every person you bring into the industry does?
Well, you brought up systems.
Yes.
I feel like I am the most efficient person out there. I'm not saying I am, but I feel like it. I mean, like I got, like your shortcuts in Outlook, I'll go over with my loan officers tips and tricks in Encompass and our mortgage software. I'll go over, like an email reply folder that these are emails that I send over and over and over again. So just becoming efficient, knowledgeable. I look up guidelines. I don't just call and just ask somebody the rule. I'll look up guidelines. Now I do go to my underwriting manager and ask.
Yeah, but you look it up first. That's how you learn.
Yes.
Okay.
Being resourceful.
Yeah. So you would tell someone, hey, look, develop systems early.
Yep.
And be super resourceful.
Or join a team that has systems and you can.
Well, why reinvent the wheel? Shorten your learning curve 100%. Okay. What's one thing looking back that you're like, oh God, do not do that. Learn from my mistake. Don't go down that path. It'll cost you a bunch of money or a bunch of time.
Well, hiring the wrong person, I guess.
Okay.
Paying for a rookie loan officer to go through the Xenix training or whatever boot camps, and they don't work out. And I didn't ask enough questions, and I didn't go deep enough. I would say, or hiring the wrong processor or hiring the wrong transaction coordinator, where they become maybe a cancer to the office. So being selective on who you hire, because you're right, you can't hire every new person. I probably talk more newbies out of the industry that I don't feel like are going to cut it. Then I was like, I'm sure you didn't expect this job interview to go this way, but the fact that you haven't brought one single pre-qual in at the mortgage company you've been with for a year and a half, and you've been going to open houses and calling on realtors, this probably isn't meant for you.
Probably not for you. Yeah, what I just heard there, Shawn, is, and I've been coached this myself because I fell victim to this. We need to be slow to hire and fast to fire. I used to be fast to hire and slow to fire. Yes. Yeah, I like people. I like to I impose my drive onto them and I impose my will onto them, but I realize I can't do the work for them. Yeah. I can't make them be likable. I can't make them, be willing to do whatever it takes to succeed. Yeah. So yes, but you heard it here for the 15th time. Be slow to hire, fast to fire. How about this? Favorite book? I know you're more of a book listener than a book reader. What's one of your favorite go-to books that you would recommend to somebody?
Oh, geez. I can't go political.
We try to stay purple, right? And look, a lot of people like to go to the Bible. I think that's a little bit of a crutch, but I do know that you do dedicate, right, daily time to your spiritual reading. And your thoughts, but have you listened to a book that you're just that one?
Okay, so.
And if you haven't, it's okay.
The Bible is like my daughter was asking me over the weekend, what's your favorite book? And I said, well, the Bible. And they're like, she goes, pick something else, Dad. Yes. I'm like, okay. Yes. So probably one of Jonathan Cahn's books. He is a Messianic Jewish rabbi. So it means he's Jewish heritage and he accepted Jesus as Lord and Savior. And he has the most outstanding line of books that talk about different dates over history and how that history repeats itself every 50 years, 100 years. It's hard to explain it, but this guy is Jonathan Cahn. He has a bunch of awesome books.
How would you spell Cahn?
I believe it's C-A-H-N or K-A-H. I think it's C-A-H-N.
Okay.
Yeah. So he has some awesome books.
Okay.
Yeah.
I will look up Jonathan Cahn. If people want to get a hold of you, what's the best way to get a hold of Shawn Miller with Van Dyke Mortgage?
You can go to ShawnMillerHomeLoans.com. You can get a hold of us at our office, 727-214-6400. Cell phone, 813-383-6066. Any of those is good.
Instagram, LinkedIn, you on any of that?
Yeah, Instagram, LinkedIn.
But are we going to get you, or we're going to get your wife / your marketing assistant?
The team administrator.
You'll get the team administrator.
She does a lot of the posts.
Yeah. I have a feeling you're a cell phone guy.
I go in and I look at notifications on Facebook, but I don't look at a lot of the feed because it kind of sucks you in.
All right. So that 813 cell phone number he gave y'all, if you need to get a hold of Shawn, that's your dude. Last question. What is one piece of advice, because you're a father, 2 awesome daughters, what's one piece of advice that you're making sure that you raised them with? Because maybe it was something you had to learn the hard way. Like it wasn't advice that was given to you growing up or when you're in college or in high school, but it was something you learned through the school of hard knocks. But you're making sure that your daughters have everything you had growing up plus so much more, and this is part of that plus so much more.
I would say marriage sticking together, husband and wife sticking it out through tough times.
Okay, so that is something that you didn't have growing up, but you make sure that they've learned it and they've also witnessed it.
Yeah, well, I mean, early on, my mom and my dad got divorced. I mean, I got an awesome stepdad now, awesome brother out of it. So, I mean, no regrets.
It worked out.
Yeah, but you keeping that family nucleus together is big. Me, I think I told you when we were at lunch, I'm finally, for the first time ever, making it home for dinner this year. In the 11 years that I've been married to my wife, she's been begging me to have dinner with the family. I said, okay, if you don't have dinner at 5 and you have it at 6:30, I can make it home for dinner. So now we eat dinner as a family, usually about 4 or 5, sometimes 6 nights a week.
I love that. I have a whole presentation on love, structure, and discipline.
Yeah.
And what it means to raise children, what it means to raise dogs, what it means to be a great leader and manager. And that's the magic formula to
I need excellence. The one on dogs.
It's love, structure, and discipline. Same thing with kids, same things with loan officers, right? Yeah. And part of that structure when it comes to both dogs and humans is eating meals at the same time, because it brings consistency into the relationship, and it removes worry and doubt, especially with animals. But then with humans, because of the human element, the connection, that sitting down. It's the one thing my parents did that, looking back, I didn't know what they were doing, but we did it really well as a family, which was eating dinner together. And it was something that I was very fortunate that my wife and I were able to participate in. But like you, early on in my career, my rule was I wouldn't miss 2 dinners in a row.
Okay.
Because I went a year or 2 where I'd miss many dinners.
Okay.
But it was I got to a point where it wasn't that I wouldn't miss dinner. I wouldn't miss 2 back to back.
Okay.
And then also, like you, had to tell my wife, and I can't eat at 5:30. Like if we can eat at like 6:45 to 7:30, I can be home every night. But and I think that's that balance people are looking for. So I'm happy you opened up and shared that. Shawn, I so appreciate you taking the time to come on T-Lop to hang out with me on the Loan Officer Podcast. Y'all, if this is our first time meeting because you only hopped on because you're friends with Shawn, my first name is Dustin. My last name is Owen. You can find me on LinkedIn like crazy. Like hit me up, follow me, connect with me. I'm the most accessible. If you are a loan originator and you're looking for Shawn Miller type results and you don't have a good business coach or a good sales trainer, check out what we're doing over at T-Lop's Originator Coaching. All of those details are found at tloponline.com. On Instagram, you can follow me. I'm at the Loan Officer Podcast. Same thing goes for Facebook. He's Shawn Miller. I'm Dustin Owen. That's all the time we have for you today. But we do look forward to catching you on the next episode. Peace.